Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to This Week in Bitcoin. Today is July the 20th. 2018. Strong hand, long-term thinking, unconfiscatable. This is your source for 20%er Bitcoin knowledge. And dudes, we got quite a show going for you today. We've got JW Weatherman. He's making his return to the show, of course, legendary. And the legendary Marty Bent. He is making his debut on the show. We've also got Adam Perlow. He's supposed to come in from Israel at some point during the show. I don't know where he is right now, but we're not waiting. We're starting this thing off right now because obviously I'm very excited. So, you guys like to talk about the fiat price, all you people out there. Well, one interesting thing that's happened with Bitcoin that I've noticed, and I usually don't care that much about it, is the Bitcoin dominance has seemed to increase. It has increased lately. The altcoin percentage of the overall market cap of cryptocurrency has gone down. Is this the start of something new, or is it just part of the cycle? I think it's just part of the cycle. I think the top tier ones will pump again. They always do. But let's just start off with JW. What's up, man?
Hey guys. Thanks for having me. Yeah, I think that it's probably going to pump again at some point. But the way that I look at it is that there's a lot of new people entering the space. It's hard to figure out what's going on. So it's almost as if they can tell that there's something valuable vaguely in this general area. Their vision is blurry. They're not sure exactly whether it's Bitcoin or Ethereum or whatever. They don't have the technical expertise to tell the fraud from, the fraud and the fiction from the genuine. And so they kind of just throw money at that general category. And that's why we see the pumps and all the altcoins and all of the nonsense. So I don't really see any reason that phenomenon is going to go away. I think it's part of people coming in and getting oriented and then figuring out what's truth and what's marketing BS. But on the other hand, the narrative is getting really, really hard for these guys, right? With Lightning, with smart contracts coming to Bitcoin, with just the reality slowly setting in for a lot of people that software is hard and you can't just like make these huge claims and then deliver on them in 6 months. And that the projects that are frustratingly slow are also the projects that are actually building something. I think that education is starting to pick up steam as well. So it'll be interesting. I'm kind of of two minds about it, I guess.
Very interesting. Marty, what do you think's going on here? What has caused the recent increase in Bitcoin dominance, and does it even matter?
Yeah, I think I agree that it's cyclical. I mean, this happens after bull runs, and we're 7 months away from our highs. So people are pretty exhausted. To echo what JW Weatherman said, people are holding on to these bags for 6+ months. There's really not a lot of development going on for most of these alt projects. They're all pretty much vaporware, most of them at least. So people are just exhausted, and maybe there's a flight to safety within crypto, where Bitcoin is obviously the most secure, biggest network with the best network effect. But I would also say that I don't think the market cap dominance indicator is very useful in particular. I think it's a bad metric to use in this space, because anybody can spin up an altcoin and sort of depreciate from Bitcoin's dominance. So I don't like using that as a metric, because when it's a bull run and everything's pumping and these altcoins take a share of Bitcoin dominance, like it's not really it doesn't really describe what's going on as like how strong these networks are. I don't think it's a good measurement of I don't think it's a good benchmark to use in this space in particular. I think it can be gained pretty easily.
Yeah, it can be gained. It isn't the best benchmark, but when it does go in the other direction, like it's been going, it is they're not gaming it as much. What's going on here? I was thinking. So I'm glad we discussed that, and We got that out of the way for all the altcoin fans out there. Dudes, Bitcoin is still the rock. 1 Bitcoin equals 1 Bitcoin. Yeah, you're top tier altcoin. It'll pump again. So it'll make the news. And we'll talk about it another time, I guess. Okay, now something that Marty brought up to me earlier, and we weren't going to talk. I didn't really think about it. What's up with this BitcoinOps.org? This news just broke this morning.
Yeah, so from what I can glean after conversations with John Newberry and James O'Byrne, it's basically an initiative to get out to all of the big economic players within Bitcoin, the Coinbases, Squares of the world that are accounting for a lot of the transaction volume on the network, to basically help them apply best practices when it comes to transaction batching, fee estimation, coin selection, and use of SegWit. So we found in the middle of December, when fees were at an all-time high, a lot of this was caused by these economic players just not using Bitcoin's blockchain efficiently. I think at one point, Coinbase had $3 million worth of transactions that weren't unspendable because they were dust, because they weren't batching their transactions correctly. So this Bitcoin Optech initiative is spearheaded by a bunch of core developers that know Bitcoin code very well and are going out to extend an olive branch to these economic players to say, hey, let us walk you through the best practices to make sure that we're not wasting any space within each block.
Very, very interesting educational approach. Let's educate the big players here. It's worth a try. What do you think about, speaking of education, JW, what do you think about that?
I think it's a great idea. I think there's a lot of stuff happening in Bitcoin in general, in the ecosystem, let's say. But one of the things is that there's not, there's just a lot of unsolved problems in any new space that's created out of new technology. And one of those unsolved problems, I think, are really good consulting companies and professional services businesses that can help people just get Bitcoin integrated into their business in the way that makes sense. And I think to some degree it is why we saw the SegWit 2x attack have so much momentum, because businesses were terrified that they had either made bad technical decisions that were going to be brought to light, or they were terrified that they weren't going to be able to implement the code changes that they needed to implement to be on the cutting edge, and they were going to be left behind. So if there's a good group of folks that are able to show up and help them do that, I think that it just makes the whole network more robust, and in the long run helps with Bitcoin adoption. So I think it's awesome. I think the more for-profit businesses that can get developed to solve specific problems, the better. I know this one is maybe a nonprofit. I'm not exactly sure how they're doing it.
Yeah, it's nonprofit.
It's a nonprofit, but it's a nonprofit that's being sponsored by a bunch of for-profit businesses. So I'll give them a pass on that one a little bit, because generally nonprofits have a big problem where they're not addressing the cost of capital, and they're not as able to be long-term sustainable. But I don't necessarily think that applies in this case. But in general, I think the more for-profit businesses that get spun up to solve problems in and around Bitcoin, the better off we're all going to be. So I'm a big fan of what they're trying to do there.
Yeah.
Oh, sorry. Continue. Didn't mean to interrupt you.
No, I was going to say initiatives like this are important in the long run, because obviously the biggest obstacle that we have in Bitcoin and blockchains in general is scaling. So any initiative that really I don't want to say kicks the can down the road to scaling, but makes it so we don't have these scaling issues sort of sooner than they need to be brought up. So if somebody's reaching out to all these big players to make the chain more efficient, just gives us more time to figure out scaling solutions, which is again better for us all in the long run.
What JW brought up a very interesting point. Imagine if we would have had this organization in the days of 2x during that threat. This kind of is like a preemptive move to make sure we don't have another corporate 2x type of threat there again. And in the long run, those threats will never succeed, but they do create weak hands. By the way, everybody, pound that like button. Check out the links below if you want to see where all these dudes are coming from. I've got their links below. Okay, so that story is a news story that just broke. Something else that's been going around that I also did not address in my notes section below, but I think Marty brought this one up off the air also. This free rider thing, that holders are free riders. That little meme that's been going around a little bit that people have been fighting back against too. Do you have any thoughts on that, Marty?
Yeah, I mean, so the crux of this debate, right, is around how to incentivize development, and the whole crux of the conversation is how do we incentivize development on these blockchains in particular. And some people, mainly altcoiners and ICO scam artists, think that you need a development fund to sort of incentivize these developers. But what we're coming to find is that a lot of these developers work on these projects because they're passionate about creating technology that can change the world. And so the term, trying to stamp hodlers with the term free rider, in my opinion, is completely counterproductive and really shows a lack of understanding of how these incentive systems work. Because hodlers are not free riders at all. I mean, by definition, they had to buy or work for Bitcoin. They had to pay for it. It wasn't free at all at any point, whether you're giving up your time or giving up money. And on top of that, hodlers create the price floor for this that sort of kicks in the beautiful feedback loop that is Bitcoin. So without hodlers sort of creating a price floor, why would miners mine Bitcoin? You need that sort of lure to bring people in. And then on top of that, there's multiple aspects and variables to Bitcoin's network's effect, development being one, hodlers being another. And hodlers like yourself do different things to contribute to the network effect, like your show right now, and what I do with the newsletter, what JW does with MathBot and his courses to teach people. There's multiple aspects, and you don't just need to incentivize developers in this space. I don't think you really need to create a sort of like strong movement behind these blockchains. I would argue that Bitcoin has the biggest, and developers will sort of coalesce on that chain saying, hey, people see value in this. Let me try and help add value to this network.
The world needs savers. Hey, have a strong hand, people. JW, your thoughts?
Yeah, I think a lot of this stuff is really fun because the government has all of these court historians, right? And they're constantly producing economic fallacies. And the purpose of these fallacies is to trick you into being a little less ready to burn down the parliament building when they steal your stuff, right? This is the whole game, right? It's to create a group of citizen slaves that are more cost effectively fleeced. And the free rider problem is a brilliant example of that. The free rider problem doesn't exist, but all of us have been indoctrinated since we were like 4 years old to think that this thing exists. And then we turn around and we apply it to things like Bitcoin. The free rider problem in a nutshell is the idea that if person A produces something of economic value that benefits person B, and person B doesn't pay for it in some way, person B is a free rider, and we're supposed to be stupid enough to believe that creates a circumstance in which person A can't produce that economic value anymore. So to apply this to a real simple example, let's say that I paint my house. My house looked crappy. I live in the neighborhood. I paint my house. It's much more beautiful now. Who benefits from that? Well, I benefit from it some, but everybody else in the neighborhood actually arguably benefits from it more, right? Their property value goes up. Mine probably doesn't go up as much as the cost of the paint. They look at the outside of my house more, right? I'm mostly on the inside. So they're all free riders. So what the government wants you to do is connect that problem with the solution, which is people with guns going around to everybody in the neighborhood saying, you're free riders, therefore you have to give us a little bit of your money. And that's supposedly the only solution. The reality is there's no problem there, right? Like free riders exist in, if you wanted to call them free riders, in all kinds of different walks of life, right? If I plant flowers in my front yard, everybody that smells and sees nice flowers is a free rider. But that doesn't mean I suddenly can't plant flowers in my front yard, right? So there is no free rider problem. It's a fallacy to begin with. And the whole idea that holders are somehow taking from developers like explain the mechanism for that. There's no way that that's happening. The developers are doing what they're doing because they think that makes their life better. The holders are holding because they think that makes their life better. And yes, fortunately, it all lines up, and hopefully it will result in the abolition of human slavery, at least modern slavery. And it's all good.
Yeah, and I think,
oh yeah, sorry.
I was gonna say, I think the crux of the debate was like, hey, these hodlers, like, why would a developer work on this if there's a bunch of people who bought it early and got rich? And I just think that's a wrong sort of mental framework to approach this system.
Yeah, again, I think what you originally said is altcoiners and ICO people trying to, I guess, promote their ideology or making themselves seem more legit, or making themselves into being, we're the next Bitcoin. Bitcoin's old fashioned. No. Bitcoin is the next Bitcoin, everyone. Remember that. I wanted to, I just lost my train of thought there. We were, the educational aspect of all of this, that people are kind of indoctrinated into this mentality of scapegoating, of trying to, using these terms like free rider to kind of, I don't know, scapegoat people who shouldn't be blamed for anything. It's a way of deflecting personal responsibility. But when we're talking about what's really going on out there, I had a poll, and this poll it said what really has a long-term impact on Bitcoin. Of all these three things, which one has the bigger long-term impact on Bitcoin? A billionaire actually buying some Bitcoin, Congress talking about Bitcoin, or the media fudding Bitcoin? Well, I thought it would be pretty obvious, walk the walk or talk the talk. Talk is pretty cheap. But there are still so many people out there who think Congress talking about Bitcoin is more important for the long term of Bitcoin than people actually buying it. I mean, again, a billionaire, and so earlier this week we had a billionaire making, what was his name, Mark something or other. He bought a lot of Bitcoin. He said, or he admitted he had a lot of Bitcoin. I mean, that takes Bitcoin, that much Bitcoin off the open market. That makes it that much more scarce. I mean, but the government talking the talk or the media fudding the FUD, that will pass. Bitcoin doesn't care about that at all. So, I mean, these are just kind of some basic concepts, deflationary concepts, the limited supply concepts that so many people out there do not get. And so I bring this all up because we've got a guy here, JW. You're trying to educate people. You've got this educational, you've got like a hardcore educational course going on this weekend. I thought this would be a good time to just bring it up. And what do you think about the lack of understanding that's in the space right now?
Yeah, I think it's really, really high. Thank you for mentioning it. So this weekend, we're going to spend 8 hours total, like 4 hours on Saturday and then 4 hours on Sunday, going through all of the basic economics that you would need, including like what money is and how it works, what speculation is, where prices come from, all of those sort of foundational things. And then we're going to be talking about how that applies to cryptocurrencies and Bitcoin. And what's great is like you get like 3 hours with me covering economics and Bitcoin, and then somebody like Saifedean to kind of clean up any mistakes or any confusion or just reinforce the concepts. And then on Sunday, the same thing. You get like 3 hours with me, and then Eric Lombroso shows up and you have like a good 1 hour Q&A with him. So this is the third time we've done the course this weekend. It's going really, really well. And the way that I look at it is in a lot of ways, like I'm trying to help deprogram people that are in a cult. Like we have all been indoctrinated into a cult from a very early age. Things like the free rider fallacy are very important elements of that cult. And I can't do this in an hour news show, and I can't do it just on Twitter. And a lot of people, they need to have the back and forth dialogue with other people in a small group. And honestly, the more I think about it, the more I am actually, in a lot of ways, replicating exactly what you do when you're trying to deprogram people out of a cult. Like a small group of people, a couple experts, a lot of intimate dialogue, because it's just hard to absorb some of these really offensive concepts that are true, but they're offensive if you've been told for a really long time that, you know, that this guy is God and he's going to take care of you. And in this case, it's the state, right? The state is going to take care of you. You should worship it, adore it, be a patriot, respect the office of the president, even if you don't respect the president himself. Like all of these things, they're just so much in our blood that when I tell you something like you can never have a shortage unless there's a price control, it takes a while to work through that and see that that's actually the truth. And it is an emotional process, frankly. So it's been really interesting and really helpful for me. Just 2 days ago, we had Max from Venezuela in, and it was great because every time I said something positive, relatively speaking, positive about government fiat, he was there to say, well, you know, except for every 23 years when it blows up, like it's blown up for me and completely ruined my life. So it's been a really good experience for me as well. So, but I think we need more stuff like that, right? We need people to spin up businesses to try to solve these problems, and one of the problems is definitely education.
Well, what your course is basically, it's not for everyone either. You've got to be willing to get into this type of thing. I mean, and just open your mind a little bit more. And I think Bitcoin is the first step. I think you're like a second step type of course, I would say. And I gotta say, man, you've got quite a lineup there. 8 hours over 2 days, people. You're going to get it to the next level there. And also Bitcoin Meister discount. Say Bitcoin Meister, you get a little bit of a discount. We mentioned it on yesterday's show. I'll link to it again below. But yeah, the more education, upper education, basic education that's out there, the better for the space. But again, still 20%ers out there. We're always going to be the 80%ers yelling nonsense will always outnumber us. But remember, you know, you're on don't be peer pressure to go back into the fiat side of things. Stick with the one Bitcoin equals one Bitcoin side. Pound that like button. Hey, Marty, what do you have to say about education? Well, about anything that we just talked about, the billionaire buying the Bitcoin, anything.
Yeah, I think obviously education is like the most important part. And like JW said, there is sort of a mass rewiring that needs to be undertaken. That's sort of what I try to do with my daily newsletter, my podcast, just via osmosis, just showing up every day, writing a little bit about a different topic every day, just trying to get people exposed to these ideas because like JW said, they are somewhat radical in today's day and age for some people, for especially if you grew up in a system, the fiat neo-Keynesian system that we grew up in. It's really hard for people to sort of question their beliefs and then rewire from a new foundation. And then going back to like what's more important to Bitcoin's network effect in the long run, I think everything sort of has an indirect effect on the network effect. Yes, a billionaire buying, using a portion of his portfolio to buy up some Bitcoin is definitely going to help the price in a positive way. And then that creates FOMO. Maybe his friends are like, all right, if Jim's buying Bitcoin, maybe I should too. And that could create like a rush to get some. Up to this point, that, I mean, I think the institutional investors meme has been a little overblown. I don't think as much money has entered as people think, but it's good to see. And then the news flooding it and talking about it, they've been doing that for 10 years. And I'm a big believer that no news is bad news. So as long as they're talking about it, it's on people's minds, whether it's Bitcoin's dying or it's too volatile. Like if it's on, like 5 years ago, if you were to tell people that CNBC would be talking about Bitcoin every day, they'd be like, shut the hell up now. And now, whether it's good or bad, they're talking about it every day. It's on people's minds. And this is a good thing overall, I believe.
Yeah, that's a good way of looking at the media FUD. That is a good way. We 5 years ago, we didn't even have it. The CNBC crying about it every day. I do want to, you reminded me of something earlier this week. The rumors about BlackRock. People are still asking me, oh, so they bought it? I mean, I have no idea. BlackRock. I know eventually BlackRock is going to get themselves some Bitcoin. What do you think about this? Do you think BlackRock actually, they kind of walked it back a little bit? Do you think they walked it back because they don't want the price to pump up too much before they buy it? Or what do you think about that, Marty, the whole BlackRock situation?
No, I mean, BlackRock is the biggest ETF provider in the world. So just from a brand perspective, they have to be very careful with what they talk about and how they approach these subjects, because they are a bit taboo in the traditional finance world. But I mean, there was, it was two competing headlines. One, BlackRock's thinking about it, and then Larry Fink, the CEO, said we're not thinking about it. Nobody's asked us about it. But with that being said, there is rumors and rumblings of an ETF approval, as there have been for over a year now. But when that ETF approval does happen, I think it will happen. I don't know when exactly. You're definitely going to want to have some Bitcoin before that happens, because the way these ETFs work, you need to sort of capitalize your fund with the underlying asset. So they're going to have to buy Bitcoin in bulk to sell these products, which obviously is going to have a positive effect on price.
Before we get to JW on this, and this is gonna add in some meat to when he comments on it. So yeah, these guys they're gonna buy it up eventually, but these guys are also used to diversification, almost diversification for the sake of diversification. I think, and I'm not a fan of all these ones out there, but I think the top tier altcoins will also benefit for this from when the institutions really get in. And I don't care if the institutions get in tomorrow or 2019 or 2020, they're going to get in eventually. But I think they're going to pump up some of this Ethereum stuff and, name your top tier altcoin. What do you think about that, Marty? And then we'll hear from JW.
I actually disagree. Having a background in finance, I worked for a managed futures fund where we solely invested in commodities, futures markets. And what you've come to find, and you work in the space, is that the due diligence and the abundance of caution that's taken by these fund managers is above anything that you'll see anywhere else, specifically with futures funds and ETFs. Like, the due diligence you need to do on the back end to make sure that these funds are compliant and that you're not messing with any unregistered securities is sort of immense. So I would actually think that these institutions are only going to create products for something that has the security and network effect of Bitcoin. I just think they're very risk averse traditionally, these funds, and I think something like Ethereum, where and these guys are smart, so they know what they're talking about. So they know, they have researchers looking into these protocols, and if a researcher says, hey, Ethereum's got an unproven security model that they plan on transitioning to at some unknown time in the future, the CIO of that fund is going to be like, potentially, like, this might not be the most risk-averse investment we can make. I could be wrong, but I think just from experience that these guys are very, very cautious of what they build products around.
It's a very strong argument you make, especially when we're the point you brought up about Ethereum. I don't usually even do something like this, but how about Litecoin? Litecoin is as boring as they get, really. It's just Bitcoin. I could see a bigger, based on your logic, them getting into Litecoin more so than getting into Ethereum, based on what you said, because nothing about Litecoin is going to change. That's.
I'm not going to disagree there. Okay. But again, it's it's hard to say. It is hard to say. That's just.
I don't. There's a part of me that doesn't think that these dudes will. It would be great if they only just get into Bitcoin, but there's of all the players in the space right now, there not that many guys that just got into Bitcoin. I don't know. Okay, so I've been holding back. You take it away now, JW, on what we were just saying.
Yeah, I think this is a perfect discussion, because pretty much we're hitting all the points that I talk about in my class. I think diversification is like point 2, but diversification is just another fallacy that's designed by the government to take your stuff. Real investors, they become specialists, right? They only buy oil futures when the Prince of Qatar posts the right thing on his Facebook account and there's a storm in the Gulf, right? It's a concept that is sold to retail investors, which just means dumb money that is there for the fleecing, to make them feel better about the fact that they're investing in things that they know nothing about. And your great grandmother would have told you what an absurdly stupid idea it is to buy something as an investment without having any expertise in it, knowing anything about it. But after a few generations of government indoctrination, they've substituted specialization and expertise and hard freaking work with this watchword diversification. I don't think that the guys at the top will take that position themselves, but it doesn't mean that they won't throw together something like what Coinbase has done, where they take something that has value and a bunch of stuff that doesn't have value, especially if they can buy those things that are valueless ahead of time and then sell them afterwards to the fund and to the suckers. That's pretty much an opportunity that I don't see a lot of those guys passing up. Yeah. So then the question becomes, do you try to get in on that, right? Do you try to outrun dumb money? In general, I think people that try to do that try to predict what dumb money is going to do, is like trying to predict what a blind, crazy horse is going to do. If you make money off of that, you've made money the same way that in a less intelligent way probably than people have made money gambling, because dumb money is by definition very, very unpredictable. So what I would say is, don't take that approach. Take the approach that your great grandmother would have taken. Become an expert on the topic. Learn what has value and what's being undervalued by the market. Buy it and wait until the market realizes how great it is, and then give them a little bit of it at a much higher price. And I think that something like Lightning is really useful for this, right? Like Bitcoin has been the most secure money that humanity has ever had the opportunity to pick up for at least 5 years now. The only reason that we're all not using Bitcoin as money is not because of the scaling issue or anything else, because it was better than the US dollar. It was better than gold 5 years ago. The reason we're not using it is people just need to understand what it is and how it works. And I think things like Lightning help with that a lot. I think smart contracts are cool. I like what's happening on that front, as you know, sort of a more advanced scripting language on Bitcoin, because I think it's going to enable some cool features. But I really don't care, because what I really care about is the adoption of a sound money. And so the only reason that I really care about that stuff is that it helps people that are being deceived into thinking that Bitcoin isn't the right way to go for sound money, into not being deceived, right? So even Lightning is primarily an educational tool as far as I'm concerned. And yeah, I think that's the battle that we're going to fight. But progress is great. I mean, it's moving forward at a really rapid pace.
Yeah, I can see some of the big players replicating the Coinbase model. And you said, and just packaging some not so valuable stuff with the real deal. Again, I want to stress this to everyone. Just because I'm bringing this stuff up doesn't mean I like it at all. I only tell people, if you got fiat, you use that on Bitcoin. Don't try to get the other stuff. Diversification for the sake of diversification is lunacy. And yeah, I agree with JW there that it is something that has been, it's a buzzword that people, yeah, of course, you got to diversify. And people don't even think about what that really means. Yeah, I'll buy some crappy version of cryptocurrency instead of the real thing. And again, there are some top tier altcoin ones, and there might be reasons to get into them or whatever. But by and far, I mean, I travel all around the world. Bitcoin is the one. It is the one that is brought up by the most people. It's the one that's known by the most people. It is the rock. One Bitcoin equals one Bitcoin. Pound that like button, people. You know the whole spiel over here. Okay. You brought up Lightning Network there. So let's talk some Lightning Network. What's buzzing in your head about Lightning Network right now, JW?
Well, I think more and more it's becoming really obvious that Bitcoin is a technology that's going to continue to be built upon and improved, that it's an open source protocol. It's not the way Saifedean says, it's not like iPhone versus Android. It's like gunpowder. It is a new piece of technology. It's going to be used in all kinds of new and interesting ways. The most important thing, of course, is that it's going to be used as money. But again, by seeing that it can be used in all these new and interesting ways, it makes it more obvious to people that it really is a better choice for money. So I think instant, basically free payments, who cares? I don't care that much about that problem. There's all kinds of ways we could have solved that with basically Bitcoin banks that have the amount of Bitcoin that they're holding on behalf of other people transparently held, so that they're never running at fractional reserves. That we could have introduced multi-sig schemes to keep corruption from happening within the companies. Right? There's a lot of ways we could have solved the fast instant payments problem. I think the way that we did with Lightning is far better, right? Like I love Lightning. I think it's an amazing piece of technology. It has some downsides, but they're basically not even worth talking about because I think that they're the sort of downsides you would expect in something that's really amazing but is new, and it's going to be refined and polished over the next few years. But as awesome as it is, the main thing that it does is it just helps people understand what the heck Bitcoin is, and that's why I'm most excited about it.
All right. I'm always pumped about Lightning Network, but I keep on hearing more and more people are contacting me about it, which is great. Marty, what are your latest Lightning Network news or thoughts?
Yeah, no. So I don't know if you guys have been following him on Twitter recently, but at time value of Bitcoin. Yes. I don't know if it's of BTC or of Bitcoin, but
yeah, we're going to try to get him on the show. I wanted to get him on this show actually, but he's got a 9 to 5. But continue. He's a great dude. Yeah,
so Nick Fajita, he's been doing some really interesting deep dive into how sort of interest rates and capital markets might be built on top of Lightning, and basically using the amount of fees that staker on the Lightning Network collects to sort of derive an interest rate and a sort of benchmark to sort of create capital market structures on top of Bitcoin. And the most interesting part of this is that it's like the first time in history that we have non-custodial. There's no custodial risk to it. Like, you control your Bitcoin at every point throughout this process, so you don't have to give up your money and have somebody else stake it on your behalf. There's very little risk that somebody is going to steal your money. And then so on top of that, it's interesting to see these conversations begin to sort of bubble up, and we're really starting to think of very unique ways in which these technologies can be used. And I think what Nick is doing and Alex Bosworth is doing as well is very important. And again, these are very, very early days conversations. Nobody knows exactly how this is going to play out or how these interest rates will be derived. There's a lot of obstacles you have to overcome. There's identity and credit scores are a huge sort of obstacle that we need to overcome before these are truly fleshed out and sort of designed well. And then on top of that, I've been talking to people that are building layer 3 technologies on top of Lightning, and they're starting to connect their test nets to Lightning Network's test nets to sort of experiment with layer 3 technology. And that's really, so I think a lot of what's been going on in the altcoin space is people's impatience. They want everything out of the box. And I think what people will come to realize in the next year or two is that you can do everything that the file sharing and the world computer stuff, but you just need to move it up the protocol stack. And there's some really interesting things happening on layer 3 already that people don't even know about. And this has to do with using Lightning microtransactions to basically share files and pay people for holding stuff.
Dude, that is blowing my freaking mind. Layer 3 solutions already. And yeah, that's not the best news for the altcoiners out there. Hey, but it's a free market. Everyone can compete. We'll see how it all ends up in the end of the day. But wow, that's some good Lightning. That's getting me layer 3 solutions now. Oh geez, there's
been some FUD around Lightning Network too. Going back to like layer 2 Lightning, where people are like, we're just recreating the banking system that we have on Lightning Network. And I think people are sort of misunderstanding how our traditional finance system works. Like the Fed funds rate and the LIBOR rate are sort of preset by a preordained group of people, and they sort of ordain that interest rate on the market. Whereas these interest rates on Lightning Network are completely emergent and based off the economic activity on the network. So it's not really being pontificated. The interest rates will not be pontificated onto the network. They are literally a reflection of the economic activity on the network. Finally, we're going to get a free market interest rate here, which is the total opposite of what you just, the dictates of the Federal Reserve or, Europe or whoever. It's very exciting stuff indeed. And again, that goes. This is all in the wheelhouse of JW right here. I mean, we're talking about educational aspects. And did you have anything to add to that, JW? What he just said?
I mean, I don't think of like lightning fees as interest rates. I think of them as just transaction fees or like something that you buy from a service provider. I do think that lightning is amazing though. Like as much as it doesn't matter in the big scheme of things, because Bitcoin is what matters. And if people understood how Bitcoin works, it would have already changed the world really, really drastically.
How do you not see it as an interest rate?
So interest rates are what you get paid for giving somebody your money and they hold it, right? And it's very hard to get pure interest. There's three ways that you can make money, economically speaking. You can do labor, you can do speculation, or you can earn interest. Almost everything that you do as a human has elements of those three things tied up in it. But when it comes to trying to get interest, what that would look like solely is the amount of money that you're giving for delaying consumption, right? You're taking on no risk, you're doing no labor. And that's not what I think is happening with lightning fees. With lightning fees, I think what you're doing is you're being paid for setting up a node, for doing the work to get that thing up and operational. And then you're able to, just like Visa charges a transaction fee, I think you're able to charge a transaction fee for facilitating that transaction.
Well, I would argue it's analogous to an interest rate because you are withholding consumption. You're basically facilitating payments and you're getting paid a little bit of interest for that. And the other aspect comes into it is time. So the way that Nick and Alex Bosworth are sort of deriving these interest rates are the amount of fees made over a certain period of block time on the blockchain. I think it actually, coming from a financial background, these, as much as everybody hates banks and finance and Bitcoin, like these are very practical and necessary markets to develop on top. And I would argue that they are interest rates.
I think from an economic science standpoint, there's an element of interest in there. But let's just say, for example, that it cost you 100 hours to set up a Lightning node, right? It was a ton of work to do that. And so fewer people would take the time to set up a Lightning node. It would be pretty obvious that the fees would go up as a result of that, right? Because there's fewer people taking the time to do that labor, and that you're getting paid more as a result of it being a laborious thing. So I think, it's worth splitting this up, and that's one of those things that I do, and I think there's a lot of value in, but that's also why my course is 8 hours and not 15 minutes.
Hey, wait, JW, have you read that article by Nick where he really explains this stuff?
You know what? I haven't, because I know that there's a lot of confusion about how interest rates work and where they're set and how important they are. I think that so from economic standpoint, there's something called the natural rate of interest. And that is something that you only really kind of know what that is in a free market situation. And we're not in that right now. In general, I'm not super interested in trying to figure out exactly what the natural rate of interest is. The reality is that if there is a natural rate of interest that is above what the Fed sets, because the Fed just gives away free money, we're below that natural rate of interest. I think that's obvious. And that's part of the reason that we end up in the boom and the bust cycle, is because they're deceiving entrepreneurs into thinking that there's more resources available to build things than are actually there. And when they stop that deception campaign, the hangover kicks in and everybody looks around and goes, oh, I should have never built this factory or this home, because nobody really wants it. So I think it's an important concept. But I think trying to drill in and figure out exactly how it relates to Lightning, it's so far removed from, I don't know. We'll say that it's very far removed from my core area of focus and interest at this point.
Okay, good. That's your prerogative there. Very good. Let's before we get into everybody's story of the week or things that I left out, I guess something that I've noticed. I guess in the Twitter sphere, at least, is a lot of people involved in the venture capital side of things. In the way the world has worked in the past is they've been able to promote their favorites, get into these businesses early on, and control things, which is good. I mean, they take risks, et cetera, et cetera. But with Bitcoin, anyone could have gotten into Bitcoin from the beginning. And I feel there's a little bit of venture capital animosity toward Bitcoin now, and that leads to some promotion of maybe ICOs or altcoins. What do you think about that, JW? Venture capitalists and their views of altcoins versus Bitcoins and ICOs.
Yeah, it's kind of interesting because the like the best venture capitalists, the best VCs in Silicon Valley, they're also the most humble, right? And so you look at guys like Paul Graham, and he basically set up Y Combinator because he said, I can't figure out which things are going to be hits and which aren't, right? He's responsible for Reddit. And he thought that that the guys that were working on some pitch that they had thrown him were smart guys, but they had a bad idea. So he gives them the idea for Reddit, right? But at the same time, he'll tell you that he is wrong so often that that basically he can't pick winners and losers, and so he's better off just setting up this ecosystem of young smart guys and giving them a little bit of rope and getting in early on. I think if you contrast that sort of humility with the guys that are coming out and they're investing in things like CryptoKitties and all that sort of stuff, it's a really good way to see the difference between the two types of investors. And in any other space, 95% of the people that are playing are really, they're faking it, right? They're smart enough to seem smart, but they're not smart enough to actually be smart. And if you see what happened with CryptoKitties, it's a great example, right? Some of the best, most respected VCs in Silicon Valley invested $15 million in something to do digital pets on a blockchain, but not on a blockchain. That's the definition of like absolute lack of due diligence and even having a clue what's going on. So these guys are actually in that category of dumb money that's looking at this space and they're like, there's something vaguely there with blockchain. And they're reaching out to try to find things to invest in, but they won't take the time and they won't do the work to actually develop expertise to have a high fidelity view of this space. And frankly, they're not really incentivized to do so because they're part of this government machine that's been created where they have special ability to invest in products and startups where the average guy can't. And so their role is really just sort of as this middleman that's supported by government through regulation. So it's a bit of a mess, but the good news is that they're becoming less and less important, right? The whole distinction between institutional investors and retail investors and VCs, I think that's getting obliterated as time goes on, because at the end of the day, it's the guy making hamburgers in his backyard right now that's trying to provide for his family that's actually putting the money in play. And it's all of these middlemen that are enjoying the spoils of screwing him over. But slowly, he's getting educated to the point where he can just go and buy a little bit of Bitcoin and a Trezor and be done with them all. So that's the good news.
Yes, Bitcoin obliterates and lets anyone get in on this kind of thing. What do you think about the VCs there, Marty?
Yeah, so I have pretty strong thoughts about this. I just think the VC sort of mental framework applied to Bitcoin and blockchains in general is just completely flawed. I really think VCs are out of their depth, and I would argue that the VC industry is a big ego industry, and these guys like to think that they are the gods that enabled the tech outburst that has given us everything we have today. But they're really out of their depths when it comes to these blockchains. These are open source protocols that anybody can sort of audit, and you can really show that the emperor wears no clothes. But again, these guys are used to getting in early deals, so that's what you're seeing a lot of these VC funds getting in on pre-sale ICOs, which I just think are antithetical to the ethos of Bitcoin in general. And I think there's a lot of people with flawed mental models in the space right now who are trying to apply the spray and pray VC mentality to these blockchains, where they're really not dealing with a tech company, they're dealing with a monetary good, and they're completely different, and they have completely different trajectories for how they create a network effect and how they come into fruition. And you can't treat these blockchains like tech startups. They're monetary goods, and I think a lot of these VCs are gonna learn a hard lesson throughout time.
Whoa, man, that was pound that like button, everybody. He put it better than I could, man. That is exactly the train of thought I was going on there. Marty, that was what else could be said there? That was very, very good stuff about VCs. No, this is a different world. They're gonna have to get used to it, and they'll learn the hard way. So anyway, we're at the end here of the show. I do want to thank Dan Williams in the super chat. He said, Bitcoin, 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 baby. Shout out to Urbano. Strong hands. Pound that like button. Well, thank you, Dan Williams. And everybody, do check out the link section so you can see all about, I got these guys' links below. We're going to add some more links of some of the stuff that we talked about during the show that I didn't have there originally. You can get your t-shirts, your Trezor, Ledger Nano, discount codes below, and of course, the Bitcoin Meister discount to get to take JW's course. All right, so JW, what did we leave off here? What do you want to promote? Anything you want to talk about? Any issues that were forgotten here?
No, I think it was a great discussion. If you guys do want to get in on that course, I do have one slot open for this weekend. It's 4 to 8 p.m. on Saturday and Sunday this weekend. So hit me up, DM me on Twitter at WeathermanIM. Read Saifedean's book too, The Bitcoin Standard. If I could get everybody to read the book that Marty's holding and maybe a copy of Human Action, I would retire from the space because those guys are smarter than me and they said it better than me. So thanks a lot for having me on.
The retirement challenge. All right. Marty, what do you got? Tell everybody where everybody can listen to you all the time, give all your details, and what was any other issues that you want to bring up too, of course.
Yeah, so you can follow me on Twitter at Marty Bent. I have a daily newsletter. You can subscribe to that in the website link in my bio on Twitter. And then I have a podcast, Tales from the Crypt, where I basically just try to talk to Bitcoiners working and trying to make Bitcoin become a thing. You can find that on iTunes, Stitcher, basically any podcasting platform you could think of. Actually, just put it on anchor.fm. You can check it out there. So I think one thing that sort of went underlooked this week in particular was the advances in privacy tech on the wallet side. So we saw Samurai come out with a test. They're letting individuals do coin join transactions within their wallet. So they're getting a certain amount of anonymity without needing to sort of join with other participants in the network, which is a huge move forward in my book. And then Nopara, he just demoed his zero link protocol, which is very in the same vein, trying to bring privacy to Bitcoin, and it's just be a better UX in a wallet and the way people use wallet setups. So this is a huge sort of understated development this week in particular, because a lot of Bitcoin's biggest competitors, Zcash and Monero, they're basically fighting Bitcoin on the value prop that they're more fungible than Bitcoin, and we're finding out that we might not need the upgrades that people think we do. We just need better wallet UX to have better anonymity on chain, which is a huge development in my mind.
And Nopara thing is the Wasabi wallet, right?
Yeah, the Wasabi wallet, yes.
Okay, check that. I was hearing things about, it's great that the privacy, a lot of people do say, well, we need privacy, we'll use these other coins. But again, then there's the people that say it'll just be built on top of Bitcoin. There'll be privacy options involved. And yeah, that's the direction we're going to go in. So since we're talking about privacy real quick, JW, any final thoughts on privacy? Anything you want to add about that?
Yeah, I think those are some awesome developments. Nopara is doing really good work with the Wasabi wallet. The stuff that's going on with Lightning in general. I mean, Lightning just by itself is a massive privacy improvement, and we're going to see a lot of really interesting stuff, like maybe the possibility of having all of your channels when they're opened and closed being automatically mixed. Crazy stuff is on the horizon for that. And all of that is really good. Again, I just want to emphasize that Bitcoin was already the best money 5 years ago, and that hasn't changed. But the gap is just getting bigger and bigger. So it's becoming more and more easy for the average Joe to figure that out. And it's all good. And I'm more and more excited to be able to hopefully accelerate Bitcoin adoption by like 14 hours. That's my career goal. So thank you guys for helping me do that by talking about all this stuff.
Awesome. Okay. Well, I thank my guests for being on the show. I don't know what happened to Adam. He's lost in cyberspace somewhere, but he'll make it back onto the show one of these days. Remember, we do the This Week in Bitcoin show every Friday. I'm in Edmonton this week. I'll be in Edmonton again next week. For those of you curious where I am, I travel all around. But of course, I do a regular show here every single day. I'm putting out new Bitcoin content. And of course, the Saturday show is the Beyond Bitcoin show. If you'd like to talk about subject matters that go beyond Bitcoin and still some cryptocurrency stuff too. So Subscribe to the channel, people, and pound that like button. Again, thank you very much, guest. Again, people, tune in tomorrow. I'll see you later. Thanks a lot. Bye-bye, everyone. See ya.